Chipotle's stock is down nearly 10% after hours after their earnings report, in which most of their earnings report was pretty much in line with expectations. Where on the earnings per share, they reported 33 cents adjusted in line with expectations. However, on the revenue, it did come in slightly lower than expected at $3.06 billion versus $3.11 billion expected. But the main reason the stock is tanking is because the company's same-store sales shrank by more than 4%, which was much steeper than last quarter's decline of only 0.4%, which was very unexpected for analysts, which caused the stock to drop a lot. So with this big drop in stock price, I'm be analyzing the financial health of Chipotle, and then at the end of the video, I'm be using my intrinsic value calculator to see how much we can make if we bought this stock today. The first two metrics I like to look at has to do with the valuation of Chipotle, in which I look at the trailing P ratio and the forward P ratio. With the trailing P ratio, I just want this to be greater than 0, meaning the company is profitable and making money each year. And as we can see here, the trailing P ratio is greater than 0 at 46.35. I would like to add that is actually pretty high though compared to the stock market, which trades at about a 25 to 30 P ratio. So it is trading at a slight premium compared to the market, so we got to keep that in mind. But now with the forward P ratio, I want this less than 30. I don't want to be paying more than $30 for $1 of future earnings per share, in which the P ratio is the price divided by the earnings. So for the forward P ratio, I want this less than 30. And as we can see here, the forward P ratio is greater than 30 at 42.55. So that is an X for Chipotle on the forward P ratio, but a check mark on the trailing P ratio. But the trailing P ratio is still pretty high, so I would like to add that this valuation for Chipotle is pretty much a good premium compared to the market. Now taking a look at the revenue growth rate for Chipotle, I want to see a greater than 5% revenue growth rate each year. And as we can see here, this revenue growth rate is very good and very consistent, which is very good to see in Chipotle. And they're growing at about 15% each year. So this is why the stock is trading at a pretty premium valuation. Because of this revenue growth rate, it's just very good, and I really like this company with the sales. And looking at the net income of Chipotle, this is very similar to the revenue growth rate, even though we saw a huge dip in 2015 and 2016. Ever since 2017, we've seen amazing growth out of this company, growing at greater than 20%. So this is why the company has such a high P ratios, just because of this growth rate. This is growing at much faster than basically any restaurant out there. So this is why I really like this company. So this is another good check mark for the net income for Chipotle. Now the next metric that I'm going to be looking at is the shares outstanding, in which I want the shares outstanding to be decreasing over the past 5 years. And the reason I wanted to be decreasing over the past 5 years is because if a company buys back shares, that means us investors will actually have a greater percentage ownership in the company. Since there's less shares for other people to buy, we'll actually own a greater percentage. And also, that's why the earnings per share can go up even more if they buy back shares. So we'll actually get more earnings per our shares. And as we can see here, since 2020, over the past 5 years, they've been decreasing at about 0.5 to 1% each year. So at least they are buying back, but it's not very fast buybacks, which does kind of make sense since they're trading at a pretty high valuation. So if this company were to go down a lot, though, I would really want to see them be buying back more shares. But at least they are slowly buying back, and I think that's actually pretty good. And I'm glad they're not buying back like say 5 to 10%, because right now I don't know if you should be buying that much shares back. But this is a pretty good check mark for Chipotle, and so far this company looks pretty good. And if we take a look at the balance sheet for Chipotle, I'm going to be taking a look at the total debt to equity ratio, in which I want this less than 50%. If it's less than 50%, that means this company has more than double the amount of equity compared to their debt. And as we can see here, it has 132.72% total debt to equity ratio, which means they have 1.3 times more debt than their equity. So they have more debt than equity. So that's kind of a red flag for me, but I would like to add that their total cash is 1.4 billion and their total debt's 4.6 billion. So that's actually not too bad. Their net debt is about 3 billion and their free cash flow is about 2 billion. So they could actually pay this off in 2 years if they really wanted to. So in that case, the debt isn't that bad of a situation, but the total debt to equity ratio does look a little bit bad. But so far, the balance sheet is the worst so far for Chipotle, but it's still not bad. Next, I'm going to be taking a look at the analyst expectations for Chipotle in the future. And I want to see a greater than 5% EPS growth rate for the next 5 years expected by analysts. And as we can see here, analysts expect them to grow at a whopping 16.6% rate. And as we can see here, their earnings per share was actually growing at over 36% 12%. So they do see a decline in the growth rate, but at least they're still going to be growing at a very fast rate. And we want to invest in companies that are growing fast because that normally gives us greater returns. So now I'm going to be taking a look at my intrinsic value calculator and going to try and determine a price that I'd be willing to pay for Chipotle and to see if we can make a good return on this company if we bought it today. So the first thing I have to do is do future annual revenue growth rate, in which I think Chipotle could actually grow at about a 12% growth rate for their revenue. They've been growing at about 15% over the past 5 years, so I think 12% is actually a pretty decent growth rate. So now for the future profit margin. Now I have to do the future profit margin that I think that they're going to be at in the next 10 years. So their profit margin over the past few years has been anywhere from 12 to 14%. So I think a fair profit margin for Chipotle is going to be 13%. I think that is going to decrease a little bit over time because of the competition with Cava and those other companies and other restaurants. I think it could slightly decrease the profit margins, but I don't think it's going to decrease it that much. And now with the future P ratio. Right now they're trading at about a 40-some PE ratio, so I think that's way too high for this company. But I do think that they definitely deserve a premium compared to the market. I'm going to put a 28 PE ratio just because they're going to be growing at a greater rate, and I just think they do have a slight moat over some companies, and I think they definitely do deserve that premium. Now for the shares outstanding. They've been decreasing at about 0.5% each year, and I think they're going to be decreasing at that rate for the next 10 years still. So I think they're going to be barely buying back shares, but I do think they are going to decrease over time. With that being said, I get a future share price in the next 10 years at $101 per share, and right now it's at $48, meaning I get a total annualized return rate of about 7.74%. So I don't personally think you should be buying Chipotle today, but you guys do your own research on this company. I don't follow what I say, but me personally, I'm not buying the company right now. I would like to see this get to maybe $30 a share. If it got to 30, I would definitely start a position in this company, or even $35. But nonetheless, I'm not buying after this earnings dip, but do your own research, like I said, and thank you guys for watching this video. Please subscribe, hit the like button, comment down below what stocks you want me to analyze next, and see ya.